Dubai banks are saying yes to UK investors, but there's a catch you need to know about. If you're a British investor looking at Dubai's property market, you've probably heard conflicting information about mortgages. Some say it's impossible to get financing as a non-resident, others claim it's easy, and both are wrong. The truth? Yes, UK investors can absolutely secure mortgages in Dubai in 2025. I help clients do it every month, but the process, requirements and terms are significantly different from what you're used to in the UK. Miss these differences and you could face rejected applications, unexpected costs, or terms that eat into your returns. In this video, I'll walk you through exactly how Dubai mortgages work for the UK investors, what documentations you'll need, the real interest rates and down payments to expect, and the strategies my clients use to secure the best terms. Whether you're looking at a studio apartment or a luxury villa, understanding your financing options is crucial to maximize your investment. Let's dive into what you really need to know. Let's tackle the big question head on. Can you, as UK investor, actually get a mortgage in Dubai? Short answer, yes. But here's the real deal. It's different from the UK, and that's not a bad thing. Let me break it down. First, down payments. In the UK, you might put down 5 or 10% for a buy to let. In Dubai, banks ask for 25 to 30% upfront for properties under 5 million AED. If you're eyeing for something pricier, like a villa on Palm Jumeirah, that jumps to 30 to 40%. I know that sounds steep, but here's why it works. Dubai rental yields are some of the highest in the world. Take a client of mine, Sarah, from Manchester. She puts down 25% on a 2 million dirham apartment in JVC, and her 7.5% rental yield covers her mortgage payments and nets her profit tax-free in Dubai. Now what about interest rates? For UK buyers in 2025, you're looking at 4.5% to 6.5%. That's higher than the UK 4 to 5%, but remember, Dubai has no property tax, no capital gain tax, and rental income stays tax-free here. Just keep in mind, you still need to declare that income to HMRC in the UK. And here's the best part, you don't need to fly to Dubai to sign the paperwork. With the proper power of attorney, trusted partners here can handle everything remotely. Banks like Emirates NBD and Mashrek do this daily for international investors. Though I always say double check with your bank, as a few smaller lenders still prefer in-person signing. Bottom line, different doesn't mean difficult. With the right prep, UK investors can absolutely secure Dubai mortgages and tap into one of the world's most dynamic property markets. So, if you're used to how mortgages work in the UK, there's a few big differences you'll notice right away when you look at Dubai. For starters, the paperwork is a bit more involved. In the UK, your lender might ask for payslips and credit reports. In Dubai, banks want to see 6 months of bank statements, your UK tax returns, and proof of income, especially if you're self-employed. They are thorough, but there's nothing you can't handle with a little prep. Another thing, not every bank will lend to every nationality. The good news for Brits is that UK passport holders are on the approved list on all major banks, but it's always worth double-checking if you're going with a smaller lender. And here's something most UK buyers don't expect. The process can actually move much faster in Dubai. Once your documents are in order, pre-approval can take just a few days, and the deals often close in under a month. You'll want to budget for property evaluation, usually around 2,500 dirham, and be ready for a bit more back and forth with the bank than you might get at home. Finally, remember that Dubai banks are strict about income requirements. For most non-residents, you'll need to show a minimum monthly income, typically around 25,000 dirham, which is about 5,400 pounds. If you're self-employed, they will want to see your business account and possibly a higher income threshold. The bottom line, the process is different, but if you know what to expect and have your paperwork lined up, it's very doable. And when you're working with someone like me, who's done this dozens of times for UK clients, you'll avoid the usual headaches and get through the process smoothly. If you arranged property finance in the UK, you'll find the Dubai mortgage process familiar in structure, but with its own quirks and requirements. Here's what sets it apart for serious investors. In Dubai, pre-approval is not just formality, it's an essential for negotiations and speed. Most banks issue a pre-approval valid for 60 to 90 days, and having this in hand is a must if you want to move quickly on a prime asset or off-plan launch. I always advise my clients to secure this before they even start viewing properties. The documentation is more forensic than what you might see in the UK. Dubai lenders want 6 months of bank statements, UK tax returns, and for self-employed investors, audited accounts. The due diligence is strict, but it's designed to protect both you and the bank. Once you identify the property and agree terms, the bank commissions an independent valuation, typically 2,500 dirham. This isn't a box-ticking exercise. If the valuation comes in below the agreed price, your loan amount will be capped accordingly. In a rising market, this can be a real risk for investors chasing new launches. After valuation, you'll finalize the mortgage offer and sign the sale and purchase agreement. For non-residents, this can be executed via power of attorney, no need to fly in, provided your POA is properly attested. Finally, the mortgage is registered with Dubai Land Department. Expect to pay a 0.25% registration fee, plus the usual DLD transfer and bank processing fees. The key to a smooth transaction? Preparation. I ensure my clients have all the documentations pre-vetted, the right POA in place if needed, and a clear understanding of how Dubai's process can impact both cash flow and deal timing. That's how you compete with the best in this market. Let's talk about the real numbers beyond the purchase price, because in Dubai, transaction costs and ongoing fees can impact your net yield if you're not prepared. First, the Dubai Land Department charges a 4% transfer fee on every transaction payable upfront. This is a standard whether you are buying off-plan or a secondary market. You'll also pay a 0.25% mortgage registration fee on all loan amount. Banks typically charge a processing fee, usually 1% of the mortgage value, and you'll need to cover the property valuation, about 2,500 dirham. Mortgage protection insurance and annual building insurance are mandatory and will be factored into your debt service calculation. Now what about service charges? Dubai fees vary widely depending on the building and amenities. For most mid-market apartments, you're looking at something similar to what you pay for a flat in London or Manchester, typically around 2,500 to 3,000 pounds a year. In luxury towers or full-service buildings, charges can be higher than the UK average, sometimes significantly so. For villas and townhouses, Dubai annual fees are often lower than what you'd see in the UK city apartment. The key is to budget based on the specific building and amenities, not just the location. My approach is to run a detailed service charge and cost scenario for every client before any offer is made, factoring in all transaction fees, ongoing service charges, insurance, and even potential currency fluctuation. That way, you're investing with your eyes wide open, and your ROI projections are grounded in reality, not just developer marketing. Let's get into the strategic levers that actually move the needle for UK investors in Dubai, because this is where you separate a routine purchase from a high-performance investment. First, on financing. Don't just accept the first mortgage offer you receive. In Dubai, the spread between the headline rates and what you can actually negotiate is often significant, especially if you have a strong UK credit profile or can demonstrate sustainable liquid assets. I routinely leverage multiple pre-approvals to create a bidding environment among banks, which can shave 0.25 to 0.5% of your rate or reduce fees. Also, some developer-affiliated lenders offer headline rates that look attractive, but very high insurance or earlier repayment penalties in the fine print. Always run the true APR and total cost of credit, not just the sticker rate. Second, fixed versus variable. In the current environment, most non-residents are being offered fixed rate for 1 to 5 years and then a switch to IBOR-linked variable. If you're planning to hold for the medium term, model your cash flow under both scenarios and stress test for 1 to 2% rate hikes after the fixed period. I build these models for clients in advance so there's no surprises. Third, leverage the golden visa only if it fits your broader objectives. Yes, 2 million dirham is the threshold, but the real value is in its operational flexibility. Opening a local business, sponsoring family, or optimizing your tax residency. But don't let the visa tail wag the investment dog. The fundamentals of the property and yield should still drive your decision. Fourth, currency risk. The dirham USD peg is a double-edged sword. If you're funding in British pounds, you're exposed to FX volatility, both on entry and exit. I advise clients to consider forward contracts or stage transfers, especially for large deals, to lock in favorable rates and avoid being forced to convert at market lows. Finally, always think about your exit. Dubai's liquidity is improving, but it's not London. If you're buying off-plan, know the resale restrictions and factor in the developer's reputation for post-handover support. I maintain a short list of developers with proven secondary market demand, so when it's time to exit, you're not stuck in a long queue of sellers. The real edge in Dubai comes from treating your property not just as a purchase, but as a managed investment, optimizing finance, tax, currency, and exit from day one. That's where experienced guidance pays for itself many times over. If you want to dive deeper and get real answers to your Dubai investment questions, join me live at our next webinar. We cover advanced financing strategies, tax structuring, and walk through real case studies from recent UK investor deals. Plus, you'll have the chance to ask any question directly and get actionable advice. Click the link in the description below to reserve your spot. I look forward to seeing you there and helping you invest smarter.